then say, right, well, let's buy my stock back. So in that type of situation, the market maker's got lots of stock to buy back. Now, obviously, they don't have to buy it back. If they're really, really bearish, they've now got an outright sell position. But market makers' rules, well, not rules per se, but market makers' considerations are that they don't really want to have any outside position because the idea is that they're delta neutral, position neutral. Well, if they hold on to a short stock position, they use that to cover the losses that they made on the put option, right? So it's not as if they've got a free short sell that they can just hold on to forever. So the first sign of any uptick, they're going to buy back the stock. So if the stock's still selling and it's still selling and it's still selling, they may not do it. But at the first sign of like a failed auction or something like that, so the price comes down, maybe they don't do anything, the price comes up, they maybe don't do anything, the price fails, and then starts coming up, they might say, you know what, that's it. The first sign of any kind of stock buying coming in, they're going to close out their short sell, and they're going to take the price higher. So a lot of the times you'll see that the idea is that the price then rallies off that level from expiry. But until they get to expiry, the challenge, of course, at that stage is, they've got to hold on to that short sell position because otherwise they are now exposing to potential massive loss. But it's only valid in this area here, isn't it? Now it goes above this 0 point. It goes a little bit above the 0 point because they've obviously got premium to play with at that stage. So the big question is this question here. And that's normally if the stocks are below some of these key strike prices, of course. If they're below key strike prices, this is the normal in here, isn't it? This would be the normal position. Because the other side of the market is that they're obviously short puts. The dealers are short puts, but the dealers are probably also short stock against calls up here. So when the calls, if the dealers are short stock, because remember, the dealer's selling stock up here as part of a delta hedge, correct? So this is part of a delta hedge up here. So the dealers get short stock up here against a delta hedge position if they're getting any call positions. So obviously they're going to take that's called a gamma scalp. So the gamma scalp is a short stock position as well. So when the price comes down to zero, of course, they've now got zero risk on that trade. If it goes back up, they'll just sell more stock, but they don't have to do anything at that stage. So obviously if the stock keeps selling off, they might just hold on to that stock, in which case at expiry, they'll close that stock as well. That puts another buyer into the markets. So expiry is always going to be one of those events that if the price is below key strikes, it's highly likely that there's going to be some sort of buy response at the key strike expiries. That makes sense, Klaus? So expiry is usually always bullish if it's at a lower price. If it's at a higher price, it usually does nothing much. Usually does not much. Nice buy reversal on the S&P, guys. What do you think? A nice buy reversal, couple of fresh airs. So we talked about the fresh air buy in here. We started to see some pretty heavy selling coming in here. You can see big divergence between the delta selling and the tick selling. So the tick was buying, the delta was selling, talking about big absorptions into these areas. We don't get a fresh air buy trade in here, but we do get a fresh air buy trade in here. You can see the delta is now very bullish, the tick's bullish, the price is flat. So you would have had a fresh air buy trade off 48s. It just traded 68s. Did everybody get the $1,000 fresh air trade? We talked about getting the safe stuff, yes? We talked about the fresh air yesterday, yes? So you must have all got the fresh air sell. You must have all got the fresh air buy reversal because that's the bread and butter stuff. That's the easy stuff. A lot of people like to trade the difficult stuff. Well, that's the easy stuff right there, guys. Crazy good? Crazy good? And obviously we've got a macro valuation with the beta neutrals saying we should be buying as much bottom edge as we can possibly get anyway. So kind of leads into it, doesn't it? Kind of leads into it, guys. You liking it? You like that stuff? You love the delta and the beta neutrals and all this type of bits and pieces? I think so. I think so, mate. Remember the idea of fresh air trades is it's just a huge edge in terms of order flow. Simply just a huge edge in terms of order flow. Well, it wasn't just like the beta neutrals, the beta zeros that were bullish as well. Take a look at volatility, guys. Were they bearish or bullish? Into yesterday's low price, were they bearish or bullish? So even the specialists were bullish into the low prices, weren't they? The specialists were bullish into this low price here and into this low price here. The specialists were even bullish. So there was an awful lot of bullishness about that bottom edge, wasn't there? An awful lot of bullishness about the bottom edge. And sexy like a box of chocolates, guys. I'm telling you, sexy like a box of chocolates. So when everybody was losing their heads yesterday, guys, when the talking heads were all going, you're going, shout it loud and proud. Just keep shouting it from the rooftop. Sell, 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 baby. Because I'm sitting there with my buys on. I'm sitting there with my buys on. Let me get some business done, guys. I want it. It doesn't look as if it's frozen at this end, Melvin. Maybe you guys are seeing it different, but is that screen freezing or can you see my... So it was a temporary freeze. That's different. Usually when it freezes, it's frozen, right?